topic is demystifying the global token economy, and it's something that sort of really gives us a way of bringing in where Gurang's company endorses their state of play at the moment, and the other end of the spectrum is where Simon's and Ali's company, Elevate Health, is. But Eddie, can you perhaps give a quick overview of what's happened over this year in terms of token sales, token economy, where we're at, and perhaps as a backdrop to what we're going to discuss with the journey for certainly Simon's company and now for Endorse as well.
Sure. So in 2016, if we go back, the fall actually of 2016, the end of the year, there was a company called First Blood, which was in the world of video games. That's why it's called like that. They did a token sale. It's something that actually had been done before, because if you know the space, Ethereum actually has been funded through a token sale, the Ether token sale. But after Ethereum actually, apart from the DAO, which was unfortunately a failure despite a lot of money raised, there hadn't been a small or private company trying to do that. And so First Blood did it, and they raised rather quickly a few $1 million, maybe $5 million, and it triggered some interest, and some other companies tried to do it. And then we arrived in 2017, and the first part of the year there was Melonport, and then Cosmos, a few projects that actually already existed. So Cosmos comes from Tendermint, for example. They already existed, and they decided, well, I'm going to stop talking to these VCs and traditional investors because they don't get what I'm doing. So they don't understand the model. You know, a lot of these companies, they come from what we call the open source landscape and environment. And in open source, when you talk to VCs, it's very difficult because obviously you cannot say, oh, I'm going to sell my IP later. But if you saw the news, you know, while we were in Prague at DEF CON, we saw that IBM bought Red Hat for a few billion. 35 billion. But if you went to investors, you know, as a co-founder of Red Hat, it was probably difficult for them to raise because, you know, you're working in an open source environment. And that's not usually easy for VCs to understand. So beginning of 2017, a few ICOs do well. Melonport was very happy when they raised 3 million Swiss francs. And then it accelerated when Bancor, an Israeli project but based out of Switzerland, actually kept the door open. So, you know, a lot of these projects were capping the amount they raised. They say, okay, at this time we stop. You cannot send Ether or crypto anymore. And Bancor kept it open. And they raised $153 million. And that, of course, as you can imagine, made a lot of noise and attracted a lot of attention to the space. And then we had 2017. I'm not sure exactly about the numbers, but I would say probably $6 billion or maybe a bit more was raised overall in this way, right? So, but as I was saying before, that year there was actually more money than projects. A lot of people were trying to go in and trying to go in early. So what happened is it started replicating the same model as VCs, is that the ones in the know get into the deal first and they get better conditions. So people start asking for discounts, for bonuses, etc. And they try to be there early so that when the token is sold and the token gets listed on an exchange, they can make a profit rather quick. And we saw a lot of what we call flipping, a lot of people selling rather quickly. That was 2017. 2018, things start slowing down, but actually difficult to see in terms of numbers, because if you just read analysis reports, etc., you see a lot of money being raised again in 2018. But we are inside this market, and we can see that the appetite from the investors has gone down significantly. One reason is because too many ICOs meant that actually the price didn't go as high as it used to go on the listing. And basically, there was not this kind of speculative opportunity anymore. But the good thing is that companies and teams can go back to the essential and actually build solutions on the blockchain, which was what they're trying to do in the first place. So 2017, speculation. 2018, in many ways, regulation. And actually also building solutions. So that's where we are today. Most of these companies, through the token sale have raised money in crypto. Not all of them have completely transferred it into what we call fiat currency, dollar, etc. So some of these companies now are trying to find other ways to raise. Some of these companies may not have as much money as they thought they had raised, and the investor interest is shifting more, as we're saying, towards security tokens, which reassure them in a way.
Okay. Thank you, Eddie. Simon, you're at the beginning of this journey. We know a lot of, obviously, because we're working very closely, we're invested in your company, but even from when we started talking to where we are now, the market shifted and it's changed. As a founder, as the guy who's bootstrapped the company from the start, and we're supporting you, what do you think your challenges are, and how are you looking to fund the company from beyond where you are now, for the benefit of everyone here? Because we know,
So I think in two things. So first of all, in terms of how far you have to be developed with your project before you do an ICO, you need to be further down the line. So whereas before, you could have a white paper that was simply an idea, and that would be enough to raise you X amount of money. Now you need to have at least working products, working applications. You need to have pilot projects that have shown proof of concept. Ideally, you need to have buyers beyond just speculators who are willing to buy the token. So in our instance, for example, insurance companies, large-scale employers have already made a commitment to buy those tokens, so that you're still going to sell some to speculators, but they know that there is actually an end use to those tokens. And I also think we've had to be a little bit alternative in terms of how we raise funds. So we're raising more in terms of equity rather than tokens, because the market has dictated that that's what we need to do. So that's the kind of two differences we've had to do, really.
Sorry, how much are you raising?
Currently, we're raising 300 US. Yeah.
see there.
300,000. Yeah. Yeah, we're just, this is our next stage for this particular round of funding, and then we'll progress through the pilot projects, further pilot partners, and then look to raise at a higher valuation, sometime next year.
These are very small. Their ambitions are big, but they start from a very small base. And everything that we're used to doing in this space is about bootstrapping, as ensuring we build in the value along the way. So that fundraise, or that raise that you are looking at now, will be for covering pilots and and also leading to your token sale.
Leading to the token sale, have actual working product, and sort of more the social media, the marketing, the public relations around the token sale, the legalities that are becoming more and more complicated around that on a daily basis.
Right. Okay.
What is the underlying business model? I don't get, where are you raising money? How are you making money?
Okay, so that's a very good point. We charge a transaction fee. So, for example, an insurance company will choose to reward a group of policyholders for achieving weight loss, exercising more, being medication compliant, keeping their blood sugar between certain levels. So they will enter, fiat money into the platform. We take a transaction fee for all money that enters into the ecosystem.
So just quickly, just to address, we've got this relevance that's rising about, I guess we call it system integrity or security, and we envisage a future that every player on the chain has to take ownership of their own integrity or ecosystem integrity. I'm just wondering what kind of system integrity protocols you're adopting to solve that solution as well.
Tech isn't my
integrity with regards to, for instance, you have validation. There's always ways that you can compromise the integrity of the validation process. So, in your case, what's your strategy to manage that?
That's a great question actually. In our case, especially in the case of validations, So what we have right now is we have a group of maybe 10 people who are selected for every claim to vote on that, right? So these people, first of all, are chosen in a random fashion. They are anonymous, so the claimant doesn't necessarily know who is voting on his claim. These people are geographically, distributed. They are across the world. Some people are in US, Europe, Asia. Some maybe in Africa as well. That's the first part. And the second and more interesting part is about the collusion. So now what happens is, as a validator, we always want them to be voting in an honest manner. Right? So this guy is earning $500 per month. That's based on a number of votes he is doing or a number of evaluations he is doing. It might be really easy for him to just say yes, 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 or no, no, no to all the votes. And that's where all the game theoretical problems come into play. So essentially, we need to make sure that first of all they are acting in an honest manner and they are not colluding with each other. Because since there's a consensus that we need more than 60% of people to say yes, these guys can just collude together and say, hey, say yes to this claim, say no to this claim, and do all these things. And that's where all the incentivization and penalization mechanisms come into play. So again, we have a chief scientist in house who has a PhD from Purdue University, has worked at Intel, and he's working on these interesting problems. But as Ali was saying earlier, what we have found out over the course of the last 6 months dealing with these validators is that instead of penalizing them for bad behavior, it might be better to incentivize them for good behavior. So suppose a guy is acting in an honest manner, we will keep on rewarding him. We'll keep on giving him more incentive to act in an honest manner instead of penalizing the guys who act in a dishonest manner. Because since the community is quite small at this point of time, we cannot alienate any of them. We need to hold them together. At the same time, make sure the integrity of the platform is maintained. So yeah, that's how we're doing it.
Okay. I wanted to ask you. Let's go with questions because I think they're very informative. Ren.
Thank you. Your platform, forgive me. Your platform obviously it's used as sort of a integrator between insurance company and end client that you're looking to reward.
Mm-hmm.
What would stop the insurance company just directly rewarding their end client, or is it the technology where the sort of iris technology and so forth that showed earlier on? Is that what you provide?
No, well, so we provide we're an open source platform, so we don't build or design the lifestyle management devices or the mHealth devices ourselves. Right. So third-party lifestyle applications, mHealth applications will simply plug in to the platform. So in terms of why an insurance company wouldn't do it themselves, we would have a number of solutions on our platform within our sort of network that would make it easier for them to buy it off the shelf rather than have to develop their own sort of mHealth applications.
Thank you.
Okay.
Just the gentleman there, and I'll come back to you.
What happens if you don't have insurance? Because if you're an alcoholic or drug addict, probably you don't have insurance and you're going to go to NHS to fix something, right? So I was just wondering.
In this particular platform, you need to have a sponsor who is going to pay your rewards for you. But that doesn't necessarily have to be an insurer. It could be the National Health Service. It could be your employer. It could be family. It could be friends, concerned loved ones. But the basis of our platform is you need somebody to be rewarding you for your behavioural change.
I think one of the things that attracted us, if I can just add to the Elevate Health project, was the fact that this whole idea of actually creating an environment where preventative treatment works we see it as a very early trend in changes in attitude towards not just the health service and the health system, but also in perhaps rehabilitation of offenders, where you can find that the reward system, rewards can be quite effective, and once you start proving how effective they can be, I don't believe it's impossible for the National Health Service to pick up on this and see how much it's spending on treating people, and if you can demonstrate that it actually save money by using such techniques, I don't think it's that huge a stretch to see them actually justifying participating in something like this. Would you
No.
agree?
No,
Yeah.
I can't
not
get
at
my
all.
head round. You're saying it's a utility coin? Quite clearly it's a security. You know,
Why?
It's
Why
not part of the
security?
system. It's not part, you're not using it within the system. You're actually generating a reward. So therefore, by the term reward suggests security, because you're saying these are going to be worth more in value. I don't
No.
understand, you know.
I mean,
So
you know,
it's not part of your platform. You're saying you give these coins to a health company. You say,
And
here
it-
you go, buy our coins.
yeah,
Then you can give them to these people as
Yeah.
a reward.
yeah.
Therefore, what they expect them to go up in value. Why would they particularly want your coin? Why would they take Tesco vouchers as a reward?
Because Tesco vouchers don't, you know, for somebody who already goes to the gym, for example, or is already healthy, you know, if they get a Tesco voucher for doing exactly what they do now, they'll take it. But if you want to get someone who's got fairly intransigent behaviour, the fact that they're going to get a Tesco reward voucher is not going to make any difference to their motivation to change their lifestyle. You know, there's a lot of studies to show that, you know, actual money is far more stimulating for the brain.
Why?
But sorry, just I don't know if you noticed on the app, but they actually see dollars coming in. They don't see
Yeah.
the token.
The token is simply
The token is the rails.
to simply
get to the-
facilitate so many transactions. You know, if you've got 10 million users on the platform and they're being rewarded, as Alice was talking about earlier, you know, at least daily, several times daily, you know, to process that many number of transactions in real time would be simply impossible without the blockchain.
But again, now you're saying these guys are getting rewarded in dollars.
Yeah, they
Yeah.
see it. They see a dollar amount. The token is in the background, playing the role of the reward payment system, and they manage the conversion. They manage the actual kind of credit. It's like you have credits on your account. They manage all that in the back office kind of the system.
What's in it for me to take your coin, buy your coins? You're saying I still can't get my head around what's actually in it for someone to
Well, I mean,
invest in a coin.
sure.
would-
Well,
yeah,
well, first of all, we're raising equity, so you know that we're not selling
So it's
tokens
not,
right
so
now.
it's not a
No,
a utility token.
but you know,
Well,
ultimately, no, it is.
No.
No, we're selling equity, you know, shares, but it is a utility token because you know you're not the token, which we're not even selling today, right? Does not buy you a share in the company. You know, you don't get a specific dividend because you've bought the token. You know, the reason the token would appreciate would be obviously you have a number of tokens that are generated, you can never generate any more, and as more and more insurance companies or health providers or large employers buy them, you know, the price will go up simply because demand is increasing and supply is staying the same.
I would emphasise that the company Elevate Health is established in Gibraltar, and its advisors in Gibraltar are ISLAs who are working with them at the moment to ensure that the token model is compliant with their forthcoming regulations. So this is kind of not something that we are sort of guessing at. This is something that will be fixed effectively in accordance with their forthcoming regulation, and to make sure that it's fully compliant. So whatever it needs to be, it is. I think that what's going on at the moment with the distinction between security and utility is purely for the purposes of trying to avoid it being a security, so that you could sell it to a wider potential audience. We think that what's happening in Gibraltar, and we're seeing, is that they're looking at it from a slightly different view. So a token's a token. If it falls under existing security law within Gibraltar, then it either is something that is going to be covered by existing security law, potentially by the new DLT regulations that they've brought forward, which cover transfer of value. So that will be.
But then you can only do it in Gibraltar.
No, that's where the
You won't
token.
be able to do it in the US because it's a security.
Oh.
You won't be able to do it in the UK. 'cause
Do what?
trade your, or use your token.
Oh, you'll
you
be
can't
able.
use it in Gibraltar because you're saying it's It's a utility.
No, that's where.
Everyone else says it's a security.
No, I didn't say that. I didn't say that Gibraltar.
They-
I'm saying for the point of view of actually doing the token sale.
At the moment, there are thousands of tokens around the world, and some of them have this issue, but right now nobody is saying that, for example, the Elevate Health is a security. Maybe that's your point of view, which is fine, which we can very happily discuss together. But at the moment, what I think Malcolm is trying to explain is that the lawyers will look at the case and they will try to work with the regulator, the GFSC in Gibraltar, to find out, to make sure that it's a utility token in the token model that is being built.
Okay.
In relation to using Gibraltar as a registration, like an IPO sort of platform, I thought Malta would be more applicable with their structures and the favorability of doing business.
Yeah, that's interesting, because actually Gibraltar and Malta have a history of kind of competing regulations, competing jurisdictions. The reason, I've been to Malta many times. I actually did a course to the regulators in Malta at the University of Valletta, so I know the jurisdiction as well. We have been in touch with Gibraltar for now more than maybe 2 years, for 2 years. And they started the whole process of looking at what they call, DLT, which is distributed ledger technology. It's another way of saying blockchain. They've started looking at the regulatory work on that before the whole ICO wave. They started to look at it early on, and we talked to the people looking there. We talked to the Financial Commission, Financial Services Commission, which actually hired people, some of them from the UK, who are experts in this field. And we basically felt that they had an approach that we like, right? But Malta, I know that more recently actually started to kind of a post-ICO wave kind of timing, because when I visited Malta 3 years ago, they absolutely had very little interest, right?
So who's advanced in this area?
So we feel that Gibraltar is more advanced, and we feel that a little bit like what happened with the gambling world, we feel that other jurisdictions are trying to catch up, and some of them have actually kind of copied. Not saying Malta did anything, they all have their experts, but some jurisdictions we know have kind of copied the license procedure or the text that has been issued by Gibraltar.
I think we've got time for a couple more questions, and then we're going to go on network outside.
So
You're next.
from the Coinsilium level, we're currently saying that it's easier to raise equity, investee companies. So where do you see your best returns coming? Do you see it at equity level or coming from the underlying coins themselves?
We don't buy coins.
Right.
We
Getting coins from advisory.
Yeah, but we treat them, or we'd like to treat them like sort of a currency. Maybe that's not the right way it should be treated, but we can. So that's revenue. When it comes to returns from investments, then that will be as and when we get an exit, or as and when we see a second kind of a follow-up raise that the investment company's done at a higher level, and that will justify a higher valuation for the investment that we have. But they're two kind of separate areas of operation. Well, in fact, the investment is the investment. The advisory work is our operations.
But of course, the main difference, of course, is the liquidity in a way, right? So we will, as we discussed, we will put these tokens in a crypto fund, and the idea is actually to show kind of continuity and, in a way, probably longevity of that as well as an investment, or as a investment kind of side product of our activity. But I would say now let's not talk just about us, but let's talk about investors in general. There is a big difference in liquidity. Everybody knows that if you invest in equity, especially, for example, through crowdfunding platforms, it's not that easy to exit from it. Of course, we are listed on Next Exchange, so obviously there is a liquidity to our shares. But in a lot of the cases, we have invested, all of our investments are private companies, right? So then you need an event that triggers a possibility of exit, such as, for example, a buyout, somebody buying the equity, or a much higher valuation investment. But if you look at from an investor point of view, some of them may prefer tokens or crypto because you can basically sell them 24/7.
Okay. I think you wanted to.
No, so
yeah,
you just
okay.
answered the question I wanted to ask.
Follow up on this. So how are you funding or going forward? How do you intend on funding your investments? Is it from internal cash flows from you're already profitable, which is admirable for next listed company? Most of them are not, or AIM-listed companies. And are you going to reach out to shareholders, or are you basically harvesting some investments to reinvest? And part two, in your existing portfolio that you have introduced, what do you think this is worth? What's the hidden value currently? If you have any industry multiples estimates, you're smiling, maybe there is some value.
We're smiling because we get asked this quite a lot, and it's not always straightforward, but nonetheless, we do believe there's certainly value there. But I think maybe you can address the second part, I'll address the first part.
Yeah, I mean, the second part is we, obviously, because we have invested in these companies, we have sometimes, not always, but we have a seat on the board, or at least we have a communication channel which is a little bit privileged with the company. We know where they are. We know how far they have reached in terms of their objectives or their milestones, and that's why there is a smile, is because actually, we cannot be here as a listed company tell everyone, well, this is going to happen or this may not happen. So obviously, we feel, despite the bump in the market, the fact that everybody was a little bit too hyped up at a certain point in time, about almost a year ago. These companies and some of the companies in which we are invested, they are building products with revenues, and they are building products being used by large entities. And of course, you would guess that it's more like the more mature investments, the ones that we have made a few years ago. And we believe there is a lot of value that is not in our balance sheet or that is not there, but we cannot tell you more, obviously, as a listed company.
There are no multiples. There was a question from the analyst.
Yes.
Lady that asked about the values. How should
Multiple, what kind of numbers?
How should we value your company?
Well, that's we cannot answer that.
I think that you can look at our results and you can see what we value the investments at, but again, those are very conservative valuations. We're a very young company, and a lot of the things that we're doing, for instance, if you would have told me when I rejoined the board in December 16 or January 17 that we'll be doing advisory work and we'll be creating revenues, I wouldn't have even believed you. It's just came up, and we looked at it and we thought we've got to do it, and it was on top of the initial token sales we did with advise with and we invested in with blocks and Endorse, that this opportunity became apparent, and we believe that a similar kind of opportunity is starting to take shape in the security token market for us to actually provide advisory services which could be quite significant. As far as reaching out to shareholders are concerned and investing, our brokers here, SI Capital, we've known them for a long time, even before I was a director. Of course, we wouldn't be listed on a market unless we were interested in raising money from shareholders, but we're quite conscious of the fact that we want to do this on the way up. We don't want to do it on the way down. We're fortunate that we've been generating revenues. And we're fortunate that those revenues have been able to sort of, give us a degree of comfort sitting above the waterline when the whole market has been quite atrocious. But nonetheless, we would like to, if we have a choice, which I believe we do at the moment, we would like to see a more positive environment and a more kind of conducive share price, or conducive environment, positive share price, so that we can actually look after the investors that have already participated in our last raise, which was above the price we're at now, which is not that comfortable for us.
Sorry, could you? I'm new to your company, but how much equity have you raised since you listed 3 years ago?
Okay, so we raised $1 million in
1.1 when we did the IPO, and then last year
1.26 last year in
so
four separate raises.
2.22 million.
Couple more questions. Sorry, Ren.
Yeah, is it worth mentioning the activity that's going on in Gibraltar right now in regard to the crypto space and regulatory, their desire in terms of the regulatory frameworks they're putting together for crypto, and perhaps some of the advice you guys have been involved in that regard.
Well, yes, I mean, I'm happy to
Just
discuss
as a
it. Yeah,
backdrop for everyone
yeah.
to
I mean,
understand.
we've kind of been drawn to Gibraltar because of their approach to regulation and their approach to the space, and they seem to be building their regulation from the ground up rather than trying to cobble something together. And they've invested a lot of time and money and commitment, and we've been welcomed very, professionally and warmly there. They recognise what we can offer, and we're having sort of meaningful conversations with the guys there. We've set up one of our companies, TerraStream, there. We've set up the fund there. I envisage that we will be certainly looking to develop that relationship with a presence in Gibraltar in the foreseeable future. I don't want to say too much until it's actually done, but quite clearly what we get out of Gibraltar is what we can't get in the UK, which is we get certainty with regard to banking. Our bank in the UK, we have a bank account in Gibraltar. Our bank in the UK does not want us to put what they refer to as crypto flow through into the account, which means that if we sell any of our crypto, they don't want the money. So what do we do with it? Do we keep it in crypto? Do we buy a stable coin? Do we keep it outside the system? It's not the way a proper company should be functioning. Our bank in Gibraltar has a set of procedures that we follow. We work with an OTC platform there that we can sell crypto into cash and then put that cash into our bank account, fill in the right forms, and they're happy for us to hold it there. So that's banking certainty. Regulatory certainty is another area where we won't have any issues, and certainly we hope our investees or advisory clients who set up in Gibraltar can get D&O insurance cover. They can get professional indemnity cover because insurers like regulation. Likewise, they have a very straightforward tax regime. It's very beneficial. There's no capital gains tax. There's no VAT. So there's no issue with perhaps a token sale becoming considerable. There's thought that maybe token sales should be subject to VAT, but we don't have that issue there. So Gibraltar is very conducive for us. We are sort of forging close relationships there.
I think we need to
we
break
need
out.
to. They've got some food and some wine and drinks for us. So if we can move into the other room, I'm happy to move on. And thank you very much.